Right. Good afternoon. Last subject of the day, financial management. Let me introduce your resource person. This is Mr. Kapila Jai Singh, and says sorry, Merchant Bank of Sri Lanka, no? ABP, no? Assistant Vice President, Merchant Bank of Sri Lanka, and as a chartered accountant, as well as has completed our AIB associate, our AIB qualification also. Therefore, so has the experience in this field as from last cycle, we have invited to Mr. Kapila Jayasinghe to conduct this subject. And last cycle's evaluation is very good. Therefore, we have decided to continue this subject in English medium by using the services of the Mr. Kapila Jayasinghe. So I will definitely guide you for the examination. Financial management, it's a bit tough subject compared to the other subjects. Therefore, what we expect from the online and on-site students, kindly participate for the lectures each and every day. Then it's not difficult to pass the subject. Now, if not, if you join the video sessions at the last moment, if not, if you join with the program at last moment, it's a bit difficult to complete the subject. Take this opportunity again to thank Mr. Kapila to accept an invitation and come today, and would like to invite you, sir, come and session now.
Thank you. Avindra, online content board okay. Thank you. Stop share. Stop share. Good afternoon to those who are present here as well as those who are online. Am I audible to you all? To those who are online?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, Sanjeev. Gayan?
Yes, sir.
Okay, then the other one, Manatung.
Yes, sir.
Okay, thank you. You all have got the document that is a presentation on your hand, right?
Yes, sir.
Online? Yes. Okay.
Yes.
We have the soft copy. Yeah.
And you all can see the board, right?
Yes.
Okay. Great. Very thankful to Mrs. Kodakanda with that kind introduction. I presume that you all also employed, if at all, most of you, in some form or the other, in some organization, probably in banking and finance sector. So the learning that we try to get out of this session, a series of sessions, would be very important as far as your examination is concerned, because the format of our lecture would be, we will be covering the theoretical we'll be covering the theoretical and kind of discussion aspect first. Then we'll be doing past papers on the relevant topic. So let's say we do a discussion on investment appraisal. So we'll do some theory part. Then we will attempt, let's say, few couple of years past paper exams. So let's say 2022, two papers, 2021, two papers, 2021 paper, likewise. So we will touch as much questions as possible so that you are thorough with the pattern of the question, pattern of the past paper questions, and the trend of testing with the theory part. So that will be the format of our discussion. And I request you all to question, clarify, discuss whatever the doubts, unclear things. If you can't understand in the first go, do not hesitate to disturb me and get the relevant clarifications. Because adding on these doubtful areas will be very difficult to resolve at the last minute of your exam, before your exam. So best is to clarify any doubts, any unclear areas then and there as and when you get them. My effort will be fully devoted, my effort will be fully given to clear whatever the doubts, even a couple of times explanation. Make sure that you get the right idea and get the methodology or other the technique for your best understanding. So we'll start the subject, Introduction to Financial Management. We'll be starting with the introduction. Then we will be progressing to the other topics, sections. With regard to the financial management module or the paper, you will be getting during the upcoming weeks. So learning outcomes, you will be able to understand the types of business organization. We'll start from that point. Then we will understand the objectives, business objectives. Then defining financial management. Then we will understand the key concept behind the financial management theories, couple of theories. Then we'll understand the agency problem. So after the discussion, you should be able to comprehend yourself in these lines. So to start with, can we identify some common types or forms business organizations? Can you identify some types of business organizations? මොන වගේ business organizations මේ economic environment එකේ දකින්නේ? Partnerships ඔයගොල්ලෝ දකින්නේ. Sole proprietorships you can very commonly, very often seen. Then what type of organizations? Public limited companies. private limited companies. Government organizations, state-owned enterprises, SOEs. Under SOEs, you will see departments, corporations, statutory bodies, entities, then government owned companies. The the shareholder is the government of Sri Lanka. So you see different types of business organizations within this economic environment. And you probably understand the features, the characteristics of each of these types of business organizations. Let's discuss in very simple manner. So the most simple form of business entity that you can see in this economic environment are sole proprietorships. Just one person running the business. The owner and the person who is in charge of running or conducting the business is the owner himself. Right. Probably he may have a couple of employees working under him, but he is a sole owner. He is fully engaged with the business. Then the partnerships. Couple of people get together and do the business. Then public limited companies. Then we'll take private limited companies where the company is registered under the Companies Act, number 7 of 2007. So the company is different from its owners. Right. Those online, I'm audible, right? I'm audible and the screen is visible, right?
Yes, sir.
Okay. I need a continuous dialogue with those online to make sure that you all are with me. Usually
Yes,
yeah.
Yes, we are audible.
Okay. Because I might name you all with the name I can see sometimes to make sure that you all are in touch, in continuous contact with the theory, with the subject. So probably I may name you sometimes. Don't take it serious. I might name someone and just ask, am I audible? Is the board visible? Kind of stuff. So okay, fine. As far as you all can see me, fine. You see at the board, fine. Okay. Private limited companies. Now, this company, this type of business organization, we usually say that the business is a separate entity from its owners. So let's say this company is ABC Private Limited. ABC Private Limited is identified as a separate body of person from its owners, or we call them shareholders. The specialty in private limited company is that these owners, these shareholders are basically related, known to each other. And there are no public participation to form the capital of this, to form the capital, Pragdane, to form the capital of this ABC Private Limited or the organization. But the specialty As far as private limited company is the separation of the entity's identity from its owners. So same as these two individuals have their own names and the national identity card numbers with the separate birth certificates kind of stuff. This ABC Private Limited will have its own identity, PV number, etc. will have a separate birth certificate kind of certificate incorporation issued by the registrar of the company. Right. So we call this in financial and accounting entity concept. Ekaka Sankalpa. You all can take small notes if you want, because those stuff are not crowded in the note. For the benefit of everybody, I will just dictate a small para on this part. You can take the introduction. Often, OFTE, often, business organizations take following forms. You can take down this list. Sole proprietorships, partnerships, take private limited companies, then public limited companies, then state-owned enterprises. Those online you are following, right?
Yes, sir.
Yes.
Yes, sir.
Okay. Okay.
Yes, sir.
Okay. Thank you. Okay. The most simplest form of model, under this, once you put this down, then below that, the most simplest form of business organization, business type would be sole proprietorships, and the complexity of the form of other type of business entities, and the complexity of other forms of business entities would gradually increase depending on the ownership, management, and legal background. Next para.
Sir, excuse me.
Yeah.
Yeah, can you kindly list down the sub parts under SOE, please, if you can?
SOS.
Yeah.
Statutory bodies. Vyavasthapita ayatana.
Okay.
For instance, Paribhavika Seva Adhikari.
Okay.
Then Sri Lanka Accounting and Auditing Standard Monitoring Board, kind of Vyavasthapitas. Then departments, Departamentu, Education's department, then Department of Printing, then Elections Department, then Corporations.
Yes, sir. Thank you.
Okay. Next para I'll say, when it comes to the limited liability companies, one special feature when it comes to limited liability companies, one special feature is the identification of the organization as a separate legal entity from its owners or shareholders. Full stop and say. In accounting, this concept is identified as entity concept. Okay. So the owners will be related to each other. When there are more owners who are able to participate for the capital of this organization, then we call it public limited company. Public, general public. You and me can purchase the shares of this company. Rather, you and me can contribute or involve with the capital of this company. So then these are not necessarily to be related to each other. And there are Colombo Stock Exchange rulings to say a minimum public holding rule. So if this company's share capital is 100, then there has to be a minimum public holding. Let's say 25 of this 100 should be comprised of at least 100 unrelated individual investors. Kind of rules are also applicable to ensure that they are really public, right? And state-owned enterprises, you find different types of state-owned enterprises, corporations, departments, sometimes government-owned profit-making entities, like let's say Milco, then petroleum, business entities, Litro kind of stuff, kind of organization. So these are the common types of business organizations. So these are the owners and the people who will be really managing this company will be the management led by the board of directors. So out of these owners, a selected number of people will be sitting in the board to manage the affairs or day-to-day conduct of this organization. When it comes to private limited company, the related father, family members or the friends or couple or the non-related parties will identify, or may probably this entire group will sit in the board and manage the company. When it comes to public limited, if you and me, minor shareholder having, let's say, 100, 20, 50 number of shares will not be able to represent the board, but people with more number of shares will have more ability to nominate someone for the board on their behalf. Let's say this is a public limited company and this particular individual has 1 million shares. 1 million shares. This individual has 2.5 million shares. This individual has 1.5 million shares. So the others have very nominal number of shares. So these three major shareholders will have more number of opportunities to appoint for the board of directors of this company. So their interest is looked after. Right. So it's okay. So may that be any organization. When it comes to the scenario of any organization, there are different objectives. Basically, the objectives of different organizations, different form of organizations can be classified, can be identified under two segments. Under two segments, financial objectives and non-financial objectives. What would differentiate a particular objective from being a financial or being a non-financial? ඒ කියන්නේ මොනවා හරි ඔබ්ජෙක්ටිව් එකක් ෆයිනෑන්ෂල් ද නන් ෆයිනෑන්ෂල් ද කියලා වෙනස් වෙන්න බලපාන සාධකයේ කුමක් වේවිද? The answer is there in the terminology itself. Whether it's financially quantifiable or not. When something is when a particular objective is financially quantifiable, can be quantified in rupees and cents, or with a particular number, percentage, then it's financial. With objective evidences, right? When it is not, it's non-financial. So organizations have different types of objectives, financial, non-financial. Depending on the different form of business, the application would be little different. But by and large, each of these organizing business styles will have one or couple of objectives under each of these categories. Let's see how it is applicable. Financial objectives. Maximizing shareholder wealth. One important terminology, we will discuss this in detail with our next slide, I guess. But for the time being, I'll explain. Maximizing, increasing, upholding, improving, shareholder wealth. Shareholder. Who are the shareholders? The owners, not the management. Owners. Wealth. Wealth. Dane. What is the shareholders' interest for an organization? Shareholder connect organization එකක තියෙන financial interest එක මොකද්ද මූලිකව? නෑ. ලාභයක් ලැබෙමින් පදනම් වෙන්නේ මොකක්ද? ලාභයක් ලැබෙමින් පදනම් වෙන්නේ මොකක්ද? එයා දාපු
investment rate.
investment capital lege aage. So capital is the basis. On top of his capital, he should be able to generate a profit. So when the profit is generated, what will happen? His capital will expand, appreciate. ඇයි capital එකත් එක්ක යාට profit එකත් ගෙනියන්න පුළුවන් because he is the owner, he is the person who has invested. When it comes to public limited company, private limited company, you and me may be the investor, owner, people who have provided funds or the capital for this organization. So whatever the profit generated by the company during a financial year will be the entitlement of these owners or you and me. So if we wish to withdraw from the company, we can take our capital along with the share of profit, which is an increasing the value that we have invested. Clear? So let's say the company is earning a loss. Sorry, yes, please.
What is the difference between income and the wealth?
Income and the wealth. Income is the gross revenue or the inflow to the organization. Let's say I am a employee of I'm working for Merchant Bank of Sri Lanka. So I'm getting a salary for the month. That is my income. I'm delivering lectures here and I'm getting a monthly pay for that. That is my income. You all work for an organization and you all earn a salary. That is your income. Let's say I run a grocery shop at my home. Whatever the items sold into the selling price will be my income, right? Let's say I have a company and I sell cars, second-hand cars. I have 2 cars with me now. I sell them at 1.5 million each. So 3 million is my income. So income could be from the sale of goods, provision of services through business, employment income, kind of things. Wealth, in contrast, is not the revenue, because the revenue is your gross income. Dylan?
Yes, sir. Clear.
Okay. Income, the income is my gross inflow of cash. So while earning this income, I am spending my resources. So the cost of those resources, when you reduce, you get the profit, right? By coming here and doing a lecture, I'm foregoing the opportunity at my home to do some sales at my grocery shop, which is now closed. So if had I opened my shop, I would have earned, let's say, 20,000. So let's say I'm getting 50,000 from this lecture. So my cost of 20,000, when you reduce, my net income is 30,000. Let's say I have sold 2 of my cars. To buy each, I have spent around 1 million. So 2 million I have spent to purchase those 2 cars, and now I have sold them at 1.5 million each. So 3 million minus 2 million, 1 million is my profit. When you accumulate your profits, or when you accumulate your retained income, couple of years, you call it as wealth. The revenue will not be the wealth, because you are supposed to deduct something on account of the resources that you have spent. Is it clear, Dylan?
Yes, sir. Clear.
Okay, very good. So let's say I close down my business, I should be able to go out with my capital and my profit. Or let's say I don't wait till the close of the business. I want to sell my ownership to someone. Let's say I have 100,000 worth of shares in a company. I can't wait long. I have some urgent requirement of cash now. So I'm thinking of selling my stake, selling my 100,000 investment to a potential buyer and getting out of the business. So let's say let's say you, who is interested in joining this business as an investor, as an owner, is willing to buy these shares. Then we negotiate. You say, I'll pay 90,000. I say, no, I don't like. This business is into this industry, this segment, which is very popular, very good business. So I need at least 150,000. So you buy it at 130,000. Let's say we negotiate and we agree 130,000. So by selling my shares to her, I have earned 130,000. So what was my investment? 100,000. So has my capital appreciated? Yes. By 30,000, it has appreciated, which is very common when you buy and sell shares. If you are a investor in Colombo Stock Exchange, then you will understand by buying and selling shares how much of profit that you can generate. So why there are certain shares are traded at higher prices? When they are traded at higher prices, people tend to sell. By selling, they gain a capital gain, which just happened by selling my 100,000 worth of shares to her at 130,000. Why was she interested of buying at 130,000? Because of the sentiments, because of her sentiments about this business. Right? Because of sentiments about her sentiments about the business. So one objective of business organization is to maximize shareholder wealth. We'll discuss that in further. I'll put some examples and I will discuss. Then increasing the revenue and profitability. So increasing the revenue and profitability. Revenue, that is the gross inflow of cash through the operation of business, by selling some good, by providing a healthcare service, consultation to patients, or hospitality, or let's say financial service, or let's say insurance, or let's say telecommunication network. Right. So the increase in the revenue, you increase the number of items you sell, or you increase the quality of the service and attract more customers, thereby you increase the revenue. And manage the cost and make more profits. Right. So that is also another financial objective of an organization. Right mix of debt and equity. You can't expect the owners to fund the business completely.
You can't expect the owners to fund the business. They can business sector වශයෙන් ප්‍රාග්ධනය අයිතිකාරෝ පමණක් යොදවයි කියලා වට බලාපොරොත්තු වෙන්න අමාරුයි. As you as a management. Sometimes you as a management will have to go to banks and get loans. You as a management will have to go to investors and get funds on debentures, bonds, corporate bonds. So by having a combination of sources to finance the business is a financial objective. You don't understand why it is so. You will think if the owners are willing to provide funds, why should we bother of, why should we have the trouble to go to banks, go behind the banks to raise funds? There are reasons which you will understand when we discuss our third topic, that is sources of finance and cost of capital. Right? To have the maximum, to have the right, most optimum overall cost of funds to the organization, you will have to have the right mix between debt and equity. Don't bother about it, don't worry about it. You will understand when we do the sums, when we do the theories, you will understand when it comes to the sources of finance and cost of capital. So right mix of debt and equity. Return on assets. The organization has got large amount of assets. Physical assets, non-physical assets. Then the organization should be able to earn some return out of this. Let's say machines, people, systems, vehicle, plants, machineries, office furniture, equipment, fixed assets. So the organization need to earn some decent return on those assets. Again, asset අරගෙන නිකන් තියෙනවනම් asset වලින් return එකක් නැහැ. Eventually what will happen? Your second objective will be disturbed. Revenue, increase in the revenue will be disturbed. Profitability, increase in the profitability will have a challenge. Then eventually your shareholder maximum wealth maximization will have a problem. So it will have these repetitive related consequences if you don't make use of your assets in the most optimum manner. So generating a decent return on the assets is another financial objective. So these can be measured through ratios, through financial numbers. These can be measured. So those are some typical types of financial objectives. So organizations will set their targets. All annual report balut, strategic plans balut organization, company, banks, finance companies, they will have financial objectives. Generating X percentage of growth in revenue, attaining or achieving X percentage of cost to income ratio, attaining X percentage of return on equity, return on assets, return on investments. So those stuff will be there in the annual reports, strategic plans, financial objectives. Then what are non-financial objectives, which are not measurable through financial monetary terms, somewhat qualitative? Corporate social responsibility. So organizations have objective of being a responsible corporate citizen. Right. Those online, you all are following, right? Any doubts, you can disturb me.
Yes, sir.
Okay, thanks. So one typical non-financial objective is a corporate social responsibility. So organization as a corporate citizen has a responsibility. you and me as citizens of this country have responsibilities to respect the others' rights. What I'm saying, responsibility to respect the others' right. So as the corporate entities. Corporate entities are just because an corporate entity is the largest corporate entity in the country, or the most important strategically important entity in the country, just because it's owned by so and so, it cannot conduct its operations irresponsibly. So to reflect that the discharging of the corporate social responsibility, the organizations will do different types of activities. We call them as CSR activities. So for which you will spend X amount of millions, X amount of rupees, X amount of your resources, but that amount is not going to say that this is not going to say that this is a financial objective, because that responsibility cannot be financially measured just because you have spent some X amount of money or some resources in discharging that responsibility. Right. So do you understand why there is a phenomena called why there is a scenario called corporate social responsibility? Have you heard about externalities? Bahirata කියලා දෙයක් අහලා තියෙනවා. In your economics, you would have probably heard externalities කියලා. Bahirata. By conducting a business operation, the entity will do entity's business operation will have positive externalities and negative externalities. Dana bahirata, rena bahirata. Rena bahirata කියලා කියන්නේ සමාජයට, for the entire society or the environment, will have some concerning implications because of the conduct of the business. So to compensate that, the organizations, just because of these externalities, there is a implied responsibility for the organization, that is corporate social responsibility, to compensate those externalities, for which organizations will have to do some services or the activities for the benefit of the society. Then customer satisfaction. So the one another non-financial objective of an organization is to ensure that their customers are happy about their service or the goods that they sold. It's not a matter of just selling and just getting out of the relationship. Organization will drive to ensure that their customers have good perception about the organization and have some commitment about the goods and services that they have got from the company. So ensuring that is a non-financial objective of an organization. Customer satisfaction. Then employee satisfaction. So organization will again have some responsibility to ensure that a good working environment is created for its employees. They are well looked after. Their service or their contribution is rightly measured and compensated. They are motivated. They are trained. They are provided with necessary facilities to discharge their responsibilities and duties, through which employee satisfaction could be achieved. Again, organization එකක් වුණාම ඒ organization එක ඒ ආයතනයේ සේවකයින්ට සුදුසු පරිසරයක් හදන්න ඕන, වටපිටාවක් හදන්න ඕන ඒගොල්ලන්ට වැඩ කරන්න පුළුවන්. ඒ වටපිටාව ඇතුලේ තියෙන්න ඕනේ මොනවද? infrastructures for them to discharge their service. ඒගොල්ලන්ට අවශ්‍ය දේව යටිතල පහසුකම් තියෙන්න ඕනේ. ඒගොල්ලන්ට අවශ්‍ය ඒගොල්ලන්ගේ රාජකාරී කටයුතු කරගෙන යන්න අවශ්‍ය පහසුකම් මේගොල්ලන්ට තියෙනවා. Then they must be motivated. ඒගොල්ලන්ව motivate කරන්න ඕනේ. Financially and non-financially, appreciation and the financially. කියන්නේ ඒගොල්ලෝ කරන හොඳ වැඩ appreciate කරන්නත් නරක වැඩ penalize කරන්න. ඒගොල්ලෝ වැරදි වැඩ කරොත් ඒව appreciate කරනවා, ඒව penalize වෙනවා. හොඳ වැඩ කරොත් ඒගොල්ලෝ appreciate වෙනවා. Recognition. They must be recognized as the employees of this organization. Providing the right level of salary. වැඩි නෙමෙයි, අඩුවත් නෙමෙයි, right level of salaries for their commitment and for their service. ඒගොල්ලන්ගේ service එකට ගැලපෙන වැටුපක් පාරිතෝෂිකයක් දෙන්න. They're trained. ඒගොල්ලන්ට අවශ්‍ය පුහුණුව දෙන්න. So by doing all these, they can create the employee satisfaction, which is another non-financial objective of the organization. Right. So there are financial and non-financial objectives. All of these will be seen in the company's corporate documents, like annual reports, like corporate strategic plans, kind of documents, right? Then what is financial management? So we understand the business types of business organizations and that they have objectives. Not necessarily that, since this is not kind of the topic is about financial management. I haven't gone into the details of mission, vision, etc. Company වල තියෙන vision තියෙනවා, mission තියෙනවා. I haven't gone to discuss them. But we have gathered, but we have structured so far is to set the basis to understand what is financial management. Yeah, right. But having said that, the organizations will have vision is statement, mission is statement. ඒ වගේ දේවල් තියෙනවා company වලට. And more specifically, there are objectives, non-financial and financial. Right. So the topic is financial management. So this has two components: financial management. So financial management we are going to introduce. We are going to understand the definition of financial management. We're going to understand the definition of financial. So financial management is a management discipline. What is a management discipline? Management theory. Other than financial management, but other types management disciplines that you know. Financial management අමතර වෙන මොනවද තියෙන management discipline? Cash management. වෙන මොනවද?
HR.
Huh? HR management. තව මොනවද?
Assets and liability management.
Assets and liability management. Tamana. Co-financial bank and finance event.
Cost management.
Cost management. Most typical one, typical one, marketing management. Have you heard? Marketing management. What management? Ne? What management? Financial management. Right? So, this is a management discipline. Like a management discipline, there has to be 4 aspects to this management discipline. Management is all about management के components 4 planning, leading, controlling, and monitoring. Pillars of management. Management के लिए क्या है? There has to be some plan. There has to be a leading aspect. Leader connecting. There has to be some controlling. There has to be some monitoring. So financial management is a management discipline in which financial related planning will be happening. Financial related leading will be happening. Financial related control will be happening. Financial related monitoring will be happening. Clear? ඔගොල්ලෝ management කියන theory එක ඉගෙන ගනිද්දි තේරුම් ගනි කොහෙද හරි ඔයගොල්ලෝ මේ කලින් ඉගෙන තියෙනවා නම් ඕ ඉදිරියදී ඉගෙන ගත්තොත් management කියන එක ඇතුලේ තියෙනවා මේ කැලි 4. planning කියලා කියන්නේ අපි මොනවා හරි manage කරන ටික plan කරන්න. So planning will be good 60 to 70% will be planning of the work. Then while executing, there has to be good leadership. There has to be some leading for the execution. Then execute when they control karan. Api the monari particular project ya particular activity ka api manage karna vana, we should plan that activity. Then having planned, we should put that activity into action. When putting that into action, there has to be some leading. Lead when activity. Then the leader, while leading, will have some measurement to, will have some criteria to measure whether they are performing as agreed, as planned. Plan එක තියෙනවනේ මෙහෙම තමයි කරන්න ඕනේ කියලා. So against the plan, they will be controlling. Also, against the plan, they will have to monitor. එතකොට financial management වලින් කරන්නේ financial related planning, financial related leading, financial related controlling, financial related monitoring. Right. Is a management discipline where management discipline where the process of identifying, analyzing, and assessing possible strategies. Strategies kya hai? Possible strategies. Strategies. You are your organization is at a particular point. You have a mission which says this is the manner in which we are going to attain to this expected state within 2 years, 3 years, 5 years, or whatever. That is your vision. How you go there is a mission, and where you want to be is your vision. So the strategy will say how we are going to get there. The activities, the specific activities, actionable items, possible strategies, possible actionable items is a process of identifying. It's identify කරන්න පුළුවන්. Analyze කරන්න ඕනේ, assess කරන්න ඕනේ. Analyze කරනවා කියන්නේ විශ්ලේෂණය කරනවා. ඊට පස්සේ ඒ විශ්ලේෂණය කරන විශ්ලේෂණීය ප්‍රතිඵල මත තක්සේරු කරන්න ඕනේ. මේ මොනවද possible strategies වලින් මොනවද strategies අපිට හොඳ? තාම අපිට තේරුන්නේ නැහැ. Financial management is a management discipline. Financial management කියන්නේ ඒක management discipline එක. ඒක ඇතුලේ තියෙනවා management discipline එකක් වුණා. ඒක ඇතුලේ තියෙනවා planning, leading, controlling, monitoring තියෙනවා. Where possible strategies are identified, analyzed, and assessed. Management principle, management discipline එක ඇතුලේ finance යම් දෙයක් කරන්න පුළුවන් විදි identify කරලා analyze කරලා assess කරනවා. මේ කරගෙන යනවා. Manage කරනවා. Through optimal use of financial and physical resources. එතකොට strategies ඒව කරන්න ඔයාට මොනවද තියෙන්නේ? Resources තියෙනවා. ඒ possible strategies identify කරලා analyze කරලා assess කරලා ඔයා execute කරන්නේ නැහැ. ඔයාට ඒව කරන්න resources ඕනේ. Let's say there is a particular activity and you are planning to do that. ඒ activity එක කරන්න ඔයාට ඕනේ සල්ලි රුපියල් ලක්ෂයක් ඕනේ. ඔයාට තවත් එක එක විදිහේ භාණ්ඩ ඕනේ. වාහනයක් ඕනේ, machine එකක් ඕනේ, දේවල් ඕනේ. So resources, you need resources. So even to do this financial management, you need to have resources. What sort of resources? Through optimal use of financial and physical resources. Financial කියලා කියන්නේ මූල්‍ය, සල්ලි, funds, physical, භෞතික සම්පත්. මූල්‍ය හා භෞතික සම්පත්. Optimal use of. ඒ කියන්නේ ඒවා ප්‍රශස්ත මට්ටමින් භාවිතා කරලා. Now comes to point. What is the purpose of making this as a management discipline? What is the purpose of analyzing, assessing, identifying, analyzing, and assessing strategies? Possible strategies. What is the purpose of making the optimal use of strategies? Just to focus on one special thing, that is to maximize the value of the company. The financial management objective is to maximize the value of the company. We'll understand what is the value of the company. Maximize the value of the company. All these things are done with one golden goal at the end. That is the maximization of the company value. Are we clear now? The financial management is the process of maximizing the value of the company. If you say that, I would say 80% correct. 80%, 90% correct. Well, what is missing? 20 to 10%. The other components in it. What are the other components? To say financial management is a management discipline. Financial management takes into account the available resources. Available strategies. Then analyze them. Then assess them. To execute these strategies, whether it's financial management or whether it's marketing management, whether it's HR management, whatever, when there is a analysis of particular strategies, and when it is analyzed, assessed, and continue with it, it needs resources. So since this is financial management, we need financial and physical resources to drive the strategies. For what? To maximize the value of the company. Right. So financial management is a process of maximizing the value of the company. Right. Those who online, are we clear?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Okay, thank you. So I'll come to this point and then come to this slide. Huh? Wealth and profit maximization. Maximizing the value of the company. Value. Now I'll explain this further. Now let's say we have a company. Let's say we have a company, and this company is started with a capital of 100,000. Now this company is conducting its business operation. Is doing its business operation. Now this company is managed by a board of directors, and there are management and staff below. Right? And there are owners. And there are owners. Right. So on behalf of these owners, this board of directors will run the company. So this board of directors think, now we have started this company with 100,000 rupees. Now to run this company, we'll take a machine. And start producing, let's say, product X, or let's start producing a product, let's say ice cream. Right? Let's start producing ice cream. And we'll sell these ice creams to the market and have some profit. So this is their business. They have got a machine, they will get materials and they will process them, produce ice cream and sell them. So the first year, they run this operation. They generate a profit of, let's say, 25,000. Profit. Profit කියලා කියන්නේ මෙහෙම statement එකක් වයන්දොත් income statement කියලා ගත්තොත් revenue, cost of sales, gross profit, ඊට පස්සේ expenses තියෙනවා, selling and distribution, administrative expenses තියෙනවා. ඒ ටික අඩු කරාම operating profit. ඒකෙන් අඩු කරනවා finance cost, profit before tax. There is a tax අඩු කරනවා. Profit. Those online, you can see the board, right?
Yes, sir.
Yes, sir. Can.
Yes, sir.
Yes.
Okay, thanks. So there is a profit. So this profit is 25,000. So we don't declare this 25,000 as dividend and it will be retained. And we run the next year. Second year. So since this process went well, directors say we'll get another machine and double the production. machine 2. So this machine came in. Now we have spent some good handsome amount of money for the second machine as well. Now this second machine is not working. Every day it is out of service. It is being repaired. It is been always making substandard quality ice creams. Some ice cream had an ice cream quality net. Not up to the level of the customer satisfaction. So because of that, this company earned a loss of 15,000. It you might argue. It is not the case. Just because we have earned 25,000, now the repairs of the second machine is eating the profit, eating the revenue generated by the first machine as well. The second machine එක හදන්න යනවා මේ first machine එකෙන් ඉතුරු වෙන සල්ලි වල second machine එක repair cost එක යනවා. So needless to say that there will be a loss at the end in second. So this 100,000, we didn't pay 25,000 profit to the owners. So owners were happy at the first year end that our 100,000 has become 125,000. Right? But suddenly they earned a loss. Second year it earned a loss. So it came down to 105,000. Third year also, let's say it earned another 10,000 loss. So this became 95,000. What has happened? Now, has there a value created? No. The value has deteriorated. Why the value has got deteriorated? Because the investment decision of this company is not feasible. Is not valuable. Some technical guys who are in this company's management has gone and purchased the wrong machine. Because of some reason, there could be some kickback. So there would be some reason because they have gone and invested in the wrong machine, which is now a burning issue. Sick child for the company because of the company is earning losses. Or let's say there are other reasons. Now the second machine is also performing well, but there's poor management, poor marketing happening in this organization. So our ice creams are not getting sold in the market. So mostly the ice creams delivered, distributed are returned. Now I'm not taking that machine we are losing customers because of some bad quality in our product. Because of that only these losses are arising. Aap ice cream khadano, distribute karno, return it. So the reason for our loss is the poor product quality. Let's say now this board of directors, management staff is there. So there is a particular, the cost of operation is excessive. Now this company can be run with, let's say, 75 staff, but this company has 150 staff members. So excessive staff base. So admin cost is high. Because of that only these losses are. So the value is getting deteriorated. This company has 100,000 capital. Now this company has gone and invested in purchasing machines for which they have taken bank loans. Bank loans are charged at 25%, 30%, 35% interest. So there is a big finance cost. Because of that, company is earning losses. So because of the poor management of this company, in one of those reasons, may machine neka kadila, a machine like a substandard quality machine, not up to the grade of the requirements of the company. The ice cream that is produced is of a substandard quality, not of a good quality. There are excessive staff in this organization, which is a burning issue, making losses. So because of these one or four series of reasons, this company is earning losses. When the organization earns losses, the value deteriorates. Right. But not in the first year we earned a loss. We earned a profit. Second year we earned a loss, but still our value was good. Company value was 105,000. But third year it collapsed. So creating shareholder value, maximizing the value of the company can be done through generating profits. That is one way of doing that. Let's say this company is not making losses. This company is earning profits. So first year 25,000. So owners were happy, 125,000. Next year 15,000. So owners were happy, 140,000 the value of the company. Third year 10,000 profit. Owners were happy, 150,000. Now the value is 150,000. Now this board of directors say, now enough of selling ice creams, only ice creams. We can move to a different business line. We can have our own, let's say, a farm, cattle farm. We'll open up a separate company and we'll run a cattle farm. So from that we can take fresh milk and we can use as a resource, use as a material of this company. Not only that, we can earn another parallel business line to produce yogurts, powder milk powder, then ready to drink packet milks, milk packets, kind of stuff. We'll start 3 parallel business lines, and we'll start this another company to have our own fleet of cattle and do a cattle farm. So there is a business decision. Board of directors has taken that business decision and they want money. The moment that decision is taken, the share owners will see this decision as a very attractive and very timely decision. And the other investors who are looking at this company will think there was a paper advertisement, there was a news that this organization is going to expand its business operation by having a separate cattle farm, let's say in Ambevale, and also start new couple of business lines, not only ice creams. So the sentiments of these investors will be very positive. So they will try to convince the current owners, and try to get some shares. Or this board of directors will say, to do this, we need some additional capital. We will do another share issue. We'll put another 100,000 worth of shares to the market. So these investors will try to grab as much number of shares as possible. So originally it was 100,000. Now they have put 100,000. Let's say this 100,000 number of shares. They put 100,000 shares. They have they are ready to pay 2 times the value of the shares previously. Then කලින් මේ 100,000 shares වලට මේගොල්ලෝ ගෙවුව රුපියල් 10 ගන්න. දැන් මේගොල්ලෝ ලෑස්ති ගිවන් රුපියල් 25 ගන්න. Right. So what will happen to the value of these shares? This will eventually be 25. So these people will also be able to sell their shares at 25. 10ට ගත්ත කට්ටියට පුළුවන් ද 25ට විකුණන්න. 15ක් capital gain. So the value of the company has doubled, tripled. So that is the way in which the value of the company increases. The value of the company increases because of value of the company could increase or decrease because of these investment decisions, because of the management decisions, staffing, high cost borrowings, etc. Value of the companies could increase in business decisions. Do you understand that? Do you see that?
Yes, sir. Yes, sir.
Okay, thank you. Then the wealth maximization and profit maximization. එතකොට wealth maximization කියලා කියන්නේ මේ owners ලගේ wealth එක වැඩි කරන. 10ට රුපියල් 10ට shares ගත්ත නැතිව දැන් පුළුවන් රුපියල් 25ට shares ගන්න. Profit maximization, in contrast, is focusing on the bottom line of the particular financial year. A particular financial year එකේ bottom line එක positive කර ගැනීම තමයි profit maximization කියලා කියන්නේ. So profit maximization need not necessarily be through revenue generation. ඒ කියන්නේ I'll explain the practical scenario. Business එකට බෑ on the quality product එකක් එළියට දාලා හරි price එකට එළියට දාලා market එකේ competitors ලා outperform කරලා market share එකක් අල්ලගෙන හොඳ විකුණලා profit ගන්න company එකට බෑ. Because of poor management, quality of the product, cost structures, company has problems at these stages. ඒ නිසා what company will do some accounting trick. Company will say, management will take a decision, we will avoid providing depreciation this year. So depreciation එකතු වෙන expenses පොඩ්ඩක් අඩු කරන්න. Company will say, we will not book for some bad debts. අපි bad debt වලට book කරන්න නැතුව යමු මේ අවුරුද්දේ. So company will take some one of those accounting decisions, accounting accounting adjustments, and try to show some profit. The profit maximization කියලා කියන්නේ either through the genuine operation of the business or through accounting adjustments, ensuring that the company's annual performance is fine. එතකොට annual performance එක හදාගන්න එක කාටද වාසියක් වෙන්නේ? For the board of directors, for the management, for the staff. So bonus ගෙවන්නේ profit people. So management will think, if we don't make this company profitable, we will not get some bonus for this year. So operationally we have failed. Our cost of sales has gone up. We haven't been able to manage our suppliers. We haven't been able to ensure that we purchase the materials at the lowest price. එතකොට අපි මේ කියන්නේ අපි material purchase කරනවා, අපි මේ market එකේ අඩු ගන්න දීලා අපි වැඩි ගන්න purchase කරනවා. So cost of sales is high. So gross profit is narrow. So can't absorb the other cost. So companies making losses. So management says now since this we haven't been we haven't negotiated with the suppliers timely, we haven't been able to purchase the materials at the lowest cost. So we are going to have some problems in our profitability. So we will take at least some accounting adjustment and show this company as profitable. Otherwise, we'll have a problem. So profit maximization is short term. එතකොට පළවෙනි අවුරුද්ද කරගන්න. දෙවෙනි අවුරුද්දත් කරගන්න යනවා. So eventually this won't be able to continue for a long. That real failure of the organization, real business failure of the organization will be visualized at one point. මේ හැමදාම කරන්න බෑ accounting මේ adjustment හැමදාම කර ඉන්න බෑ. Depreciation හැමදාම නොකර ඉන්න බෑ. Provisions හැමදාම book නොකර ඉන්න බෑ. Bad debt provision හැමදාම book නොකර ඉන්න බෑ. Impairment හැමදාම ගන්න නැතුව ඉන්න බෑ. අවදාහරි ගන්න. So at that point this problem will get surfaced. So wealth maximization is the ability of an organization to increase the market value of its shares or stocks. රුපියල් 10 share එක 25 කරන්න පුළුවන්. One method of doing is showing some profits. It's just one way, one method. It could also be done through other methods. අපි මේ අලුත් machine එකක් ගන්නවා, because of this machine initial couple of years we will be earning losses. Why? Because this machine is very expensive, costly machine. We'll have to take some depreciation into books, but this machine will be able to create volumes from 30 onwards. Either say we will be the market leader for this. So financially, even if you take losses in the first few months, conscious, no conscious. Machine machine but we can create volumes in the first couple of years. We will be able to create products, and because this machine will be out of stock in couple of years, but there will be a good market, good demand created. We will be created in the future. So we are future ready organization. Though we take some hits to our income statement in terms of depreciation, the asset we have got is a first class asset. The asset machine we have got is a future ready asset, with which we can generate X number of profits from next couple of years onwards. Right? Ability of the increase the market value of shares or stocks. Profit maximization is the process of increasing the profit making ability of an organization or the reporting period. It focuses only on the reporting period. This is for this, just to make sure that these organizations, interested parties are safeguarded in terms of their performance and in terms of their compensations. So key difference between the wealth and they can profit maximize the wealth maximization when a decision became, they can be seen through following dimensions. Risk. So wealth maximization takes a risk into account, but profit maximization doesn't take the risk into account. For instance, I'll explain. Now this machine, purchase investment decision. Machine investment decision. This investment decision is taken by considering the risk. කොහොමද risk එක ගන්න මේ scenario එක ඇතුළට? We do, let's say, an investment appraisal. We have a topic for that. So you take risk into the account. The chances that the expected results will be different from the actual results. The risk, the chances that our actual results will be different from the expected results is the risk. That factor is taken into account when it comes to the wealth maximization. But profit maximization doesn't take that risk factor into account. It's just a matter of maximum ensuring that the reporting period ends with a positive figure. Then the timing of cash flows. First couple of years, this investment decision will be affecting negatively for the organization. But 30 onwards, we can generate 2 times profits, 3 times profits. I can උදාහරණයකට year wise ගත්තොත් එහෙම cash flow. Year 1, 2, 3, 4. Machine cash flows. අපි රුපියල් 3000 වැය කරන 3 million we spent. Let's say we get 200, 100, 5,000. $2,300, 2,300. Net cash flow 2,300. එතකොට අපිට ලොකු cash flow එකේ fourth year. Right. But there's another machine, again costing 3,000, whereas we get 5,000 in the first year, 200, 100. This is also 2,300. This machine is better than this. Why do you say that? Profitability wise, ගත්තොත් මේ දෙකම එකයි. But this machine is better than this. This machine A, this is machine B. Machine B is better than A. Why do I say that? Because early stage we get large cash flows. Early cash is good always, because what they have got here can be pre-invested. There's something called time value of money, which we will learn in our next topic. Time value of money. Time value of money is very big. Time value of money is 4,500 කමුණ time value of money අඩුයි මේකේ. Because we get after 4 years time. You don't know what the inflation would be in 4 years time, but you get 4,000 in your next immediate year, 5,000 in your next immediate year, which is more useful. Right? So timing of cash flows. Focus. Long run versus short run. මේ decision එක මම ගන්නවා. මේ decision එක අපි හිතමු මේ machine එක රුපියල් 6,000 කියන. ෆයිදා කියලා. අපි මෙතන 6,000 කම්මනේ අපි machine එකක් ගත්තොත් 6,000 විතර 6 million වේදම් කරන්න වෙනවා අපිට පළවෙනි අවුරුද්ද එකේ cash flows නැහැ අඩුයි. fourth year එකේ තමයි අපිට 6,000 හම්බ වෙන්නේ recover වෙන්නේ. But still we get 300 profit. In this case we don't get the, though we get the 5,000 early cash, අපේ machine cost එකත් එක බලපුවම we don't get the end up with the profit. එතකොට අපි long term value this machine is better. Long focus, long run and short run objectives. Short run කියලා කියන්නේ හැමතිස්සෙම මේ අවුරුද්ද profit එක. දැන් මේ අවුරුද්ද profits එක ගැන හිතන කෙනෙක් සමහර කෙනෙක් මේ option එකට යයි. ඇයි? 6000යි 5000යි මෙතන loss එක 1000ක් විතර. මේකේ loss එක 5800. It's actually marginally කියන අපි තුන් 6000යි කියන අපි තුන් 6100 at least 100 rupee loss. 100 million or 100,000 whatever. Profit. Make 5800 loss. But going forward, this is more profitable. Early, our second year, we don't get much. This investment is not that attractive. But our machine will be a good investment from 4th year onwards. When you consider those cash flows, this investment is good, but in profit terms, in profit maximization terms, investment A is not that good, because in year one we will have to book a huge loss. We don't get cash, we don't get profits. Usage. Profit will be used to compensate the directors, to say that the board of directors has discharged their responsibility, and management has contributed, staff has contributed, will compensate them. But the wealth will be used for shareholders to maximize their the profit. If it's good profit, which will be used for the shareholders to maximize their wealth. So the usage from internal parties of the business is concerned is for their own compensations. But usage from the owner's point of view to create wealth, for them to sell their shares at a higher price and earn good return, capital gain, kind of thing. Those who online, any questions, any doubts, or any unclear things? Dilan, Omar, Gayan, Sanjeev.
No, sir. No, sir. We okay.
Clear, sir. Thank you.
Yeah. Today it will be a kind of a discussion, kind of this thing, introduction part. From next year on, we will be working with sums, basically. So in this wealth maximization process, one important aspect that you need to know is value for money. Is a value for money. Value for money. You think as long as you have cash, it is valuable. Let's say you have bought a phone. Let's say you have put up a house. Let's say you have bought a vehicle. Let's say you have purchased a pair of shoes. You have bought a pen. You have bought a shoe. You have bought a watch or something. There's a something which is measured with money, monetary terms. Does that monetary value reflect the value? Is the question here. Value for money. Value and money are kind of can be measured interchangeably. Right. We'll take an example. You have bought you have put up a house. Right. You have put up a house. The amount that you have spent to put up this house is 10 million. Right? 10 million. Having put this house up, you think to sell this house. So there is a prospective buyer. He comes to see the house, and he will get a valuer or a kind of a technical person to see whether this house is really valuable. So let's say you are trying to sell this house at 50 million. This is your cost. This is your selling price. So the buyer will take a technical person to see whether this house is worth paying 15,000 for this house. So the technical person comes and take some measurements. He measures the square feet of the house, size of the house. He sees the quality of materials used for the house. He sees the design of the house. Technical person sees different things in the house and says, it's not worth paying 15 million for this house. Rather, you can buy a house with a bigger size for 15 million. If you really want to purchase this house, just pay 7.5 million. This is the offer price or the bid price. Yeah, bid karane 7.5 million. Why is it? Why is it? Not that you have spent 7.5. You have all the bills. You have all the records. You have 10 million. Agav bills, agav payment bills, mason, carpenter, mason, and all these labor payments you have got. So you have got 10 million costing on your hand. But the technical person comes and says, no, this house is just worth 7.5 million. When you multiply this square foot by the value for the square foot, you don't get 10 million, just 7.5. So don't pay, the technical person says to his client, don't pay 15 million, might as well, you can buy 2 times bigger house than this for your 15 million. Then what has gone wrong there? 3 things has gone wrong there. Economy. The manner in which this house has been constructed is not economical. What do you mean by economy? Ensuring the most cost-conscious approach to do the things cheaply. The packet of cement purchased to put this house was not cheap. The steel purchased to put up this house was not cheap. The paint material purchased to paint the house were not cheap. The timber purchased to put up this house, construct the doors, windows, and everything of this house were not cheap. The tiles purchased to lay out on the floor of this house were not cheap. when you could have purchased them at 900,000 rupees, your supplier has given them at 1,500. So probably the boss who was going to purchase the material has kept 500 rupees for his hand and purchase. Cost is on your side. And if කවුරු ගන්න ගියපු ගැන 500ක් කට් එක තියලා 1000ට ගන්න පුළුවන් 1500ට අරන්. So detailed story. So the things you have done were not on cheap basis. So you have not been economical. Right. Second thing you have done wrong, efficiency. Ensuring the use of optimum quantum of resources in the process. When you could have put up this house with 100 and let's say 350 bags of cement, you have used 600 bags of cement. මේගේ සිමෙන්ති කොට්ට 350කින් හදන්න තිබ්බගේ සිමෙන්ති කොට්ට 600ක් වැය කරලා ගන්න. Why? Wastage. Misappropriation. බාස් සිමෙන්ති ඔයා නැති වෙලාවේ බාස් සිමෙන්ති කොට්ට විකුණලා. So the cement you have purchased and loaded at your site was sold by the laborers there. They say cement ivarai mahatya. So you buy another load of cement. So likewise, the construction has got 600 packets of cement, whereas this could have been done with 350. Also, those cement packets were at higher price. Right. So the resources were wasted. It has not been done with the optimum number of resources that it could have been done. So when you instead you buy 350, you buy 600 packets of cement. So not a surprise to see this higher cost. Then the effectiveness, ensuring the expected level of quality in the output generated through the process. So the people who have put the, let's say the beam, maybe a concrete beam, concrete beam adai. So they have to beam ainkalla, they have to re-put the beam. Beam aida me construct means ගේ හදද්දි දාපු මේ මොනවද ඒවට කියන්නේ කොන්ක්‍රීට් කණු ඇදයි. ඒගොල්ලෝ ඒව කඩලා ආයි දානවා. So the material will be reused. මේකට සිමෙන්ති කොට්ට දෙකක් ගියා, තව සිමෙන්ති කොට්ට දෙකක් යනවා මේ බීම් එක දාන්න. එතකොට සිමෙන්ති කොට්ට මේ එක බීම් එකක් දාන්න සිමෙන්ති කොට්ට හතරක් ගිහිල්ලා. The output was not of a good quality, so it had to be redone. So when you don't achieve economical, efficient and effective process, you don't get the value for money. There will be a monetary value, but it doesn't reflect the value. It doesn't reflect the value. Clear? Economical being done things cheaply. Cheaply කියන්නේ මේ අඩු quality තියෙන ඒවා අරන් එන එක නෙමෙයි. අඩු quality තියෙන ඒවා අඩුවට අරන් එන එක නෙමෙයි cheaply කියන්නේ. Purchasing the things, paying the right price for the right quality. Adu quality akona, you can buy them at the right price, not the adu quality one with the higher price. Or average quality things at a super luxury price. Right price for the right quality. That is how you make yourself. That is how you make this process cheap. Efficient, resource based. Efficiency is resource based. Effectiveness, result based. Result on the net. පළවෙනි එකේ resources optimum usage එකක් නෑ. Resources were wasted. So you need to rebuild the resource. You have to refill the resources. So refilling resources is a costly affair. Right? Are you clear? Are you clear, those who online? Dylan,
Yes,
Omar,
yes.
Dan, Sanjeev, are we clear?
Yes, sir. Yes, sir.
Yes, sir.
Okay. So then the limitations to wealth versus profit maximization. අපි මේ කතා කරන්නේ limit wealth maximization, profit maximization. Then profit maximize කරොත්, why do we do profit maximization? Because the company's income statement should be reflected positively. To do that, they will not consider the risk of their decisions. They will not consider the timing of their decisions. They will not be thinking long term. They short term orientation when it comes to decision making. So with that short term oriented, timing is focus is, timing of cash flows is early, focus is short term, then no consideration of risk, you can make your company profitable, but it will not be sustainable. You have made your company profitable just through accounting adjustment, or just by not taking certain losses to your books, right? Why it is done? Because your company results must be reflected positive for the investors, for the outsiders. Whereas wealth maximization is a more sustainable approach. Long-term focus, even if it considers the timing of the cash flows, it considers the risk, right? Wealth maximization is from the owner's point of view, shareholders' point of view. So there are two sides, from the shareholders' perspective, from the internal management perspective. So there is a conflict between these two. Whilst the internal management is trying to manage the financial year with a good profit, the shareholders want a sustainable wealth maximization. We need not to make this company profitable only in this year. Just by not by taking these losses, not just by managing this company for this year, you are making ourselves happy only for this year. But we don't want that. We want the security of our capital. We want that capital to be appreciated over the year. That is our expectation. So the shareholders say, from the wealth maximization perspective, right? So there is a conflict between these two. On behalf of the owners, business wealth maximum process is spearheaded by the management. So just because the owners want wealth maximization, also I said that I mentioned that wealth maximization can be done by making this company profitable. No, as far as this profit is genuine, this profit is through a genuine, sustainable operation of the business, that generation of profit will increase the wealth over the years. But this profit maximization is through some unsustainable, short-term oriented accounting adjustment to accounting adjustment kind of mechanism, then it is not sustainable, right? So shareholders want wealth maximization. So on behalf of the shareholders, on behalf of the owners, the operation of this company, running of this company is taken care of by the management. So what's the task entrusted with the management by these shareholders? Run this company, make this company profitable, make this company profitable forever, whereby our wealth is maximized. That is the demand from the shareholder. So that shareholders' demand, fair request is entrusted with management. But management, even if they take the very right decisions, and even if they take sustainable decisions, sometimes the annual profitability would not be that attractive, or because of their own inefficiencies, they may make the company loss making, which will be seen negatively by the owners. Owners don't want to make losses. Owners want the company to be making profits, but those profits should not be artificial profits. They should be really realized, tangible, and sustainable profits. Right? So, however, financial of those groups are not long-term, rather short-term, creating conflict situation of interest with the long-term wealth maximization objectives of owners. So, in a situation where the management take unsustainable, short-term oriented decision and make the company losses, then the owner's interest is not taken care of. And if the management, just to avoid that bad image, artificially make the company profitable, then their interest again is not being taken care of. Owner's interest is not being taken care of. So if they really reflect the situation, the management will be penalized. They will be asked to leave. Their bonuses will be withheld. Their increments will be suspended. They will not be seen as good business leaders. Their market image will be tarnished. So they don't want that to happen. Management don't want that to happen. So they make this company profitable. Thereby, the owner's interest, owner's safeguard is lost. There, it creates a conflicting interest. So, why this problem arises? This problem is called agency problem. Agency problem क्या है मुकाबला? Management and the owners. There are two parties, right? This is the principal. This is the agent. Agent කියන්නේ කවුද? Principal के benefit එක වෙනුවෙන් යම් ක්‍රියාමාර්ගයක යෙදෙන කෙනා තමයි agent කියලා කියන්නේ. නියෝජිතයා. So agent is not ensuring the best interest of principal, rather he will be interested about his benefit. ඒක වෙන්නේ කොහොමද? The owner's objective is wealth maximization. Management objective is so to safeguard the image and to reflect their performance, they may maximize the profit, but which is not sustainable, which is not long term, which doesn't take the risk into account. A classic example, they have gone and invested. Now they know the company is not performing well, company will be ended up with a loss. So we will go and invest in a good yielding financial instrument, let's say a bond, bill or something, but it will not be sustainable. But if we invest this, we'll be able to get a good return for this year. So our year will be okay. So it doesn't take the risk into account. A financial instrument take a invest karama. The return come a very high return, but the risk is also equally high. So management doesn't take that into account. If that risk materializes, this problem will arise in 3 years' time. By that time, we can manage that. We can manage the situation. But now our problem is maximizing the profit. We need to show some profit for this year, which is now not going to be possible. So we will invest that and show the profit. So which is done. But as far as the wealth maximization perspective, the investment is not it's not reflecting the risk appetite of these owners. If that was told to the owners and asked, can we go and make this investment just to make this? No. It's all right. We will make a loss this year, but don't go and do that investment. That is very risky. Owners would have told. Because they are risk averse. They don't want to take an extra risk. But rather, management, since the owners have vested their responsibility of running these organizations, management as their agent, they will go and do that decision and make that investment and show the profits for the year. So the agent has not acted for the best interest of principal. So agent-principal relationship has not operated for its intended principle, intended concept, that is the safeguarding of principal's best interest. Rather, it has acted to ensure the interest of agent, while at the cost of principal's interest. Principal interest take a pirivayak vidiyata aragan, agent interest take a safeguard karagan. So this is called agency problem. How to solve this problem? The problem is solved and common. That is where the assurance process comes. Assurance process comes. Assurance by independent auditors. Independent auditors. Assurance is given to owners, shareholders, that the management has conducted the business for the best interest of the owners. And that is the agency cost. So the auditors will charge. So that charge will go to the P&L. But owners are okay to take that expense because that is for their own interest, that is for their own benefit. So they are ready to take that fee into the P&L and ensure that the management has acted for their best interest. Right. So there are classic examples in, you would have heard Enron, kind of WorldCom, kind of collapses, organizational collapse, which have reflected the bad management decisions which have led the companies to collapse. Then the recent Silicon Valley Bank, SVB scenario. Classic examples where the management conduct of business operation has not in the best interest of safeguarding, ensuring the shareholders or the owners wealth maximization objectives, right? So in all our financial management discussion, which will be unfolded from the, which will be continuously taken up in the upcoming weeks, we'll be studying these areas basically. The study of financial management will focus on investment decisions. So why do we go for this machine? Whether this machine, it is worthwhile spending X amount of money for this machine. Investment decisions. We'll discuss investment decisions. Then we'll discuss financing decisions. Working capital management. International finance. Analysis and planning. So on these lines, we'll be taking up different topics and we will be discussing each with theory part first, with some examples, then follow-up of past paper questions. We'll be doing here. So you will have to equip yourself with calculators. Make sure that you bring bring a calculator. Those online, ensure that you will have a calculator around you. If it's scientific one, that's better, because some calculations require usage of certain advanced functions which are not available with general type of calculators. If you don't spend extra, don't go and buy one new. Just manage with your current network to find one. Just equip yourself with that with the calculator. Next week we will not be starting with with investment decisions, but we'll be starting with fundamentals of financial management, that is time value of money. So time value of money will set the basis, will set the concepts for you to build your knowledge on these lines. What you will learn under time value of money will be used in calculating, in making, in drafting, in analyzing decisions on investment, decisions of financing, working capital, intentional finance, and a plan. Right? And this, it will not be in this order itself. So we'll discuss, but eventually you'll understand that what we have studied are in line with these areas of studies. Okay. So I'm done with the introduction part for the day. So next week we will meet with the time value of money. If you don't have any questions, I can wind up the class for the day. Kayan, Sanjeev, Kasum, Omal, Dilan, any questions?
Okay, sir. Okay, sir. I don't have any questions.
No doubt, sir. All clear. Thank you.
Okay, okay. Thank you. Even if you, when you comprehend yourself, if you find anything unclear, if you find some area needs clarification, no mind that we start a fresh session next week. Just interrupt me at the very beginning, or even when you progress, and just let your questions know to me, so that I'll take them up and I'll respond to you accordingly. Okay. Then thank you until maybe next time.